Baby, welcome, welcome. Financially Fluent Fridays. Here we are. It's Miss Sarah Haliburton with the Bear Home Team. How you doing, Sarah?
Good. How are you, Zach?
I'm doing very well. Doing very well. Been a busy week, which is a good problem to have in our world. So
Yes.
it's exciting. How about you?
Good. We're out in the field today. We're going to go take a look at some land opportunities. So a little different today, but we're excited about it.
Nice. Land. Whereabouts are you looking for land?
Valley Center.
Nice. Okay. Very cool. Very cool. Double check something here. Changing the setting real quick. We should be good. There we go. Perfect. Sharing with the world. Want everybody to see our fun conversation. So, all right, perfect. Well, wanted to jump in right away. I think we talked a little bit. One of the most important things to talk about right now is the interest rate market, and because there's a lot of fluctuation, and there's some things we could talk about on the technical side. But I wanted to jump in and talk about protecting your buying power, and also kind of the important things around interest rates. And I kind of wanted your insight as well. So the big thing is that rates are on the move, right? We know rates are rising. We know they're going up. The government's trying to counter inflation, which we all have heard a lot about. We know inflation's moving. And so the thing is that I've watched rates even in the last week rise over a quarter or over an eighth of a percent, almost in some situations even higher. So how would you, in our situation, we have buyers that are pre-approved. You know, some of them are getting a little bit worried, but the other side is that they're afraid that maybe they can't qualify or they won't be able to get into a home, or maybe the payment it doesn't make sense because the rates go up. What's your take on that?
So anytime that I have a client that's super interested in a home, we collaborate with the lender 100% from the time that we even want to go see it on like projecting, okay, what does the payment look like today? Because what it looked like last month is totally different. And the thing is we always talk about deals, right? Deals on the market. So you have a couple different deals. You got mortgage-driven deals, market-driven deals, and agent-driven deals. And for a long time, money's on sale. Money is still, even though rates are up, money is still on sale compared to when our parents bought and the rates were 15%, right? So we always do a payment calculation prior to writing an offer or even going to look at the property now, because rates are so, I don't want to say volatile, but they're just changing every single day.
No, that makes perfect sense, and that's really smart. Because realistically, like you've said, there is some volatility, and it's kind of sometimes a scary word. But what I always talk to people about is the payment. You know, the rates, like you said, we're still at historic lows. We're still very, very low. I remember, like we've talked about, I think in the past, my dad had a 13% on his, and was an adjustable rate mortgage, and it was one of those crazy mortgages that, you know, back in the day, and we're nowhere near that. And the other thing that kind of plays into that, when we talk about affordability, is that, well, even while rates are going up, the other thing that's changing and that's going right with it is that rents are going up too. So even though you may think, oh, well, I can't afford this, or maybe it's getting too expensive, let me tell you, if you want to buy rent a single family home, I mean, the rents are well above $3,000 at this point for most single family homes, right? So you have to look at that affordability and do the cost benefit analysis of, well, do I want to pay someone else's mortgage, or do I want to start paying my own mortgage and getting the benefits there, right?
So we bought our house in 2018. Rates were almost 5%. We got a really good deal. You know, we were able to buy down some of the rate, and we ended up at almost a 4.7. And everyone said, oh, it's a terrible time to buy. Rates are so high. But now, 3 years later, I'm staying on appreciation that I wouldn't have had otherwise. I would have kept throwing my money away renting. And so I think something else that I've seen a lot of buyers kind of have this mental shift in is that they're not buying their forever home anymore. Like, I think that's oftentimes I'm going to buy my first home and that's where I'm going to live and that's going to be my family home. Now I'm seeing buyers be like, I'm just going to get into the market and I'm going to live there 2 years, or maybe I'm going to live there a year, and then I'm going to rent it, and then I'm going to pull from that and get my dream home or my next home. Or I'm going to buy all of these properties and leverage other people's money to acquire wealth. And I think that that's a different mind shift that is really helping buyers in today's market.
Yeah, that step up property. Hey, what's going on, Nick? Good to see you, brother. Thanks for jumping on. Yeah, no, the step up property strategy is one that I talk about a lot, especially in this market. And you know, that's where obviously when we talk about affordability, the condo situation or the condo properties that are, you know, still a little bit lower on the purchase price range, but they're still appreciating and you're still gaining that equity. And it really puts you in a position where you are going to build that asset. I think that's what we have to really talk about or consider, is that when you're renting, you're paying for somebody else's asset, just bottom line. And you're not going to be in that position to leverage that property. All you're going to do is just dig yourself into a hole you're helping other people out with. Versus when you purchase, it doesn't really matter the rate as long as the payment's effective or is affordable for you or realistic for you. But you are going to always see that return on that investment. Real estate. Now, one thing I talk about a lot when it comes down to inflationary periods, times like this where the dollar is less valuable, one of the safest possible places to put your money or invest your money is going to be in real estate. Bottom line, it's more protected against the that inflationary market. Just bottom line, it's really important there. And I think the other side of the coin too is that one thing that people don't really consider is there's a huge tax benefit that comes with the writing off the mortgage interest, and in some instances even the mortgage insurance. I know they change it every other year, so I talk to your tax person about that. But the mortgage interest is always a tax deduction, and I have seen that have a major impact on our taxes personally. I don't know about you, but I kind of like that mortgage interest write-off when it comes in. So you're building the asset for the long-term purchase. You're getting the tax benefit to be able to help yourself at the end of the year, which is going to be more and more important over time. And you're putting yourself in a position to leverage up into another property. I mean, it's definitely kind of a no-brainer still, even though it's no-brainer is a dangerous thing to say. I think you have to think about it and make sure the budget makes sense and the numbers make sense, but it's still a very good investment.
And it's where you buy and what you buy, right? So if you go into a neighborhood, Zach, I know that you've been in this game a long time, but 10 years ago, North Park was not North Park. It was very much not a desirable area. And now it's very high on the level of desirable places. It's got a lot of appreciation over a short period of time if you look at the last 10 years. But at the same time, now its appreciation is going to slow, right? It's kind of like hit that mark. So then you started seeing the neighboring areas start to appreciate really, really quickly, like Normal Heights, University Heights. So finding something that maybe not be your dream home, but your starter, and then somewhere where rates are high, it's appreciating at a higher rate because it hasn't capped out yet. Those are some of the keys that we talk to buyers about that are using this strategy to kind of get into the market.
Actually, just an object lesson with that. So I have clients who purchase in Santee, which is East County, and then I have other clients that purchase in Spring Valley. So two East County areas, but two very different kind of, I think, growth paths. And the clients who purchased in Santee, we were able to refi them out, get them out of within less than a year, got rid of the mortgage insurance for them, got the rate down, similar rate, but it was enough change for them that it made financial sense. But we looked at the numbers for the Spring Valley property, and they hadn't gotten the values there yet. So, that's that emerging area, right, where people for different reasons held off on that area. It wasn't as popular, but we're starting to see that. And now I'm seeing now more and more properties come available in that area. I bought in Lakeside. The one place I didn't want to buy when we were looking, I told my wife, I grew up out here, I didn't want to, and it was the one place that made sense. And it is blowing up out here now because, again, we talk about affordability. So that makes sense. No, 100%.
And I bought in La Mesa, and at the time that I bought in La Mesa, everything was like $450, $500. No one really wanted to live there, minus like the new construction that was kind of expensive. And by expensive, it was like $700,000 at the time. And then now everything's $1 million because it became like, all right, well, if we got to go to East County, we'll go to La Mesa, then we'll go to Santee, then we'll go to Lakeside, So I think as affordability changes, so does the desirability of certain areas. And I think that that's kind of having somebody that knows kind of what those neighborhoods look like and working with people that know what the appreciation schedule is would make a lot of sense for a lot of buyers.
That's important, and there's another thing that there's some other tools out there that you can kind of utilize to help yourself. There are programs out there. If you have, now this is, take a step back. The agent's really important. I've talked about this a lot. There's two agents. There's one you're going to be shopping for 6 months, and then there's one that's going to get your offer accepted quickly, especially in a competitive environment. But if you have the right agent working with you and you're confident, your lender's confident with their ability to close, you can do things like locking and shopping right now. So you can lock in the rate and shop. Obviously, there's a certain time frame on that. You can do an extended lock on a rate for a longer period, which depending on how long you think you may be in terms of looking, you can protect your rate that way. So that's something to look at and at least talk to your lender about. I know a couple of banks that do them.
Smart.
Yeah, I mean, with a market like this, you kind of have to. But the biggest thing about that is that you have to have a realtor that's going to get the offers accepted and not shopping for 6 months, because you're not locking and shopping for 6 months. You're going to get maybe 2 months out of it, right? So, I mean, we've talked about this in the past, but how do you get your offers accepted, in such a competitive environment? And what is it what have you seen? I know you're pretty active right now. So
we just had a situation this week, actually. Clients came to me. We were at like a friend's house. They were talking about how frustrated they were with their market, and they're not in the San Diego market. They're a little bit more north, and they were just frustrated. They've been looking for 5 months. They've looked at property. They've written offers, and we're getting nowhere. And so I don't usually work that area, but I felt for these people because I really wanted to help them. And so I said, all right, last Friday we went up, we looked at property. We looked at one. It had been on the market for a while because there was a tenant in there. 17 offers on the table. We were not the highest. We were actually 10K below the highest. And we put everything we could forward. We did a shorter close time. We did a bigger EMD. We did a very short inspection period, very short appraisal period. And we offered, we had a little cash to play with. So we're able to cover a little bit of an appraisal gap should there be one. But it came down to this. The agent said out of 17 offers, I was the only agent that was professionally persistent, meaning I called every day. I sent videos. I sent texts. I said, where are we? When I say this is life-changing for this client, this is life-changing. I mean, and I sold her. I sold her on taking our offer, even though we were not the best. I showed her that I was communicative. I was quick to respond. And I think that in these types of situations, agents want to work with agents that they know are going to close and that they know are going to be easy to work with along the way. So every time that your agent is interacting with that other side, it's a demonstration of how they're going to be during the transaction. So that's super important.
that's so huge. I mean, and congratulations on that. That's a big W for them. That's awesome to help them that way.
One
I mean,
week, 1 week with me and we're in escrow. So, I mean, I kind of got to pat myself for that one, but it's not an untold story. And I think in this market too, Zach, and I don't know, maybe you're seeing this on your side, but I've met a lot of buyers that have 4 or 5 agents working for them, hoping that they bring them the right property. But the reality is because they're not committed to a single agent, nobody is working for them. They're getting the same stuff that's on Redfin. They're seeing it when they can. And there's no one that's dedicated to saying, okay, this is what you want. We're going to go get it. And so I think that that's a big commitment.
Sorry, I didn't mean to cut you out. Yeah, I literally last night had a call with some folks I met through a campaign that were basically their concern was that their agent was too busy and they weren't getting the job done and they don't feel like they're getting the opportunities. So that's one of the things we're going to do is get them connected with a realtor to kind of get them moving. And actually, you know, we had 2 offers accepted this week, big W. One of them was one of those clients, unfortunately, been shopping for a while. They've won't go into that, but they've been shopping for a while. VA loan, so it's a little tougher in this market. But we did all the things as far as you mentioned. We had the gap contingency. We shortened the appraisal time, managed to rush a few things, all that sort of stuff. And then the other one was one that has been literally shopping for less than 2 weeks. Kind of a similar situation where we got him connected with an agent and he just went to bat and killed it for him. And both times I had the realtors call me. And that's where, again, kind of that same thing where it was you get in there and you do the communication. And I've had a few different conversations with each of the realtors before the offers were in consideration. And the same thing, like you mentioned, that communication side, it being able to answer every single question, address the concerns, and be persistent and timely with the communication. I know for a fact on one of the offers, it's why it got accepted. That she made it very clear that she liked the way that I was on it, and it made all the difference in the world, because when you're fielding 18 offers, if you're not, I talked to one realtor at 6:00 at night. Most lenders are shutting down, and the fact of the matter is, I told her, call me at any point. You call me on the weekends if you have questions. Here's our time schedule. Here's our timeline. But always feel free to reach out, and it made all the difference. So I love hearing your victory because it kind of tagged right into how my week went a little bit too. It made me feel like, that's, I think, communication and having the right communicators is huge. I always tell my clients when I connect with a realtor is that put them to work first. Just because I'm referring them to you doesn't mean that they have to be the right person. If you don't feel like they're the right fit for you, let me know. I need to know that, because if I'm referring a client out and the realtor is not doing the job, or myself, if you feel like I'm dropping the ball, I need to know. So it's huge.
Tiny hinges swing big doors, right? That's what they always say. So I think it's the little things that a lot of people take for granted, and it's as simple as communication. Are you available? Do you answer your phone? And also, are you good at articulating exactly what that client scenario is, Zach? Because I know on the lending side, we were not the strongest. And they originally said, we do not want any FHA loans. And I said, well, you know what? FHA works best for the borrower. We'd really like to use this program. And here's what we're going to do to shore up your risks on your concerns with using FHA versus a conventional. And we were able to win it because we could articulate exactly where the client stood, why it was an okay offer, and what we were going to do should an issue arise, you know? So being able to problem solve through that and articulate that to the other side is super critical.
That's massive. I love hearing that. You know, that's so many people get scared of it's a VA loan or it's an FHA loan or this or that. And they're great loan programs for the right clients and for specific clients. And there's a little bit more we have to do in order to make sure it goes perfectly smoothly. But if we do our job right, they're great loans. And all they mean is lower overall payment, better situation for that particular client. And I love hearing that that's something you're aware of. So awesome. Well, I know you're in the field today. I know you got a lot going on, and it's Friday, so Red Friday. Got to get busy here. So, anything else you want to tell the world? Any other victories? Or you just gonna get out there working?
Not yet. Just keep your eye on it, man. You know, the deflation of buying power in this current market with all of the inflation that's going on, super huge. I would hate to see people get priced out because they don't have enough information or they're not sure what to do. So I can't stress enough. If you're thinking about it, if you're on the fence, contact Zach or myself. Let us get you kind of set up and see what you can do and when you can do it, just so that you don't miss any opportunities. And I know, Zach, we talk a lot about the crash and what's coming up, you know, down the line. And if you have more questions about that, we'd love to talk about that too. If you've got any other suggestions of things you want to know, drop them in the comments or reach out to us and we'll talk to you about it next Friday.
All right. Have a great day. See ya.